Welcome to the Deep Dive. Today we're really zooming in on just one source. It's a Crypto.news article from June 11th, 2025.
That's right.
And it's asking a pretty specific question. What exactly was moving the U.S. stock market on that particular day?
Exactly. We're using this article as our guide, really. Our mission, if you like, is to pull out what it says were the key reasons the Dow was up, the S&P 500, the NASDAQ too.
And even Tesla. The article mentions Tesla specifically.
Yeah, Tesla saw a bit of a bump, so we'll unpack the news, the numbers reported in the source, and try to understand the drivers it identified.
Okay, let's dive in then. The article kicks off with the results, the market snapshot for June 11th. Pretty straightforward. U.S. stocks were heading higher.
And it lays out the numbers. Tells us the Dow finished up almost 200 points. That's, let's see, a 0.45% rise, according to the piece.
Okay.
The S&P 500, it says, rose 0.16%. And the NASDAQ was up just a bit, 0.11%.
And Tesla. You mentioned Tesla.
Right. The article flags Tesla shares as being up 1.44%. So specific mention there.
So definitely a positive day based on this report. Which brings us to the big question. Why? What reasons does the article give?
It points to a couple of main factors. The first one highlighted is the inflation picture.
Inflation data. Okay. What about it?
Well, the source says the latest figures came in cooler than expected. That's the phrase used.
Cooler than expected. Does it give the actual number?
It does, yeah. Reported at 2.4% year over year.
2.4%. And the market's reaction, according to the article, what did that number spark?
Well, the piece suggests this lower number really boosted hopes, hopes that the Federal Reserve might think about cutting interest rates.
Because lower inflation gives them more wiggle room, potentially.
Exactly. That's the connection the article makes. More flexibility for the Fed.
Okay, so that's one piece. Cooler inflation, maybe leading to Fed cuts down the line. But you said a couple of factors. What else did the article point to?
The second big thing mentioned is positive news coming out of the U.S.-China trade talks.
Trade talks, right. Always a factor.
Yep. And the report notes that markets seem to be sort of recovering on this news, even with other things being uncertain, like monetary policy.
And was there a specific development? What was the positive news?
According to the source, President Trump had stated earlier that day that the U.S. had struck a deal with China specifically about rare earth minerals.
Rare earth minerals.
Okay.
That sounds significant. Why does the article flag that deal?
Well, the article explains that these minerals had been a real sticking point in the talks, a major hurdle. China, it notes, understandably wanted to keep control over the strategic resource.
Crucial for tech, right?
Absolutely. So a reported deal there, according to the source, looked like real progress on a tricky issue.
Interesting. And the article did it mention what China was seeking in return in these talks?
It did. It says China was also pushing for access to advanced U.S. microchips.
The chip access issue.
Yeah, described in the piece as being crucial for AI development. So it highlights that whole tech competition angle that's part of the trade picture.
Got it. So we've got these two potential positives reported. Inflation cooling off, maybe paving the way for rate cuts, and this apparent breakthrough on trade.
Yeah.
But the article also mentions ongoing worries, specifically around the Fed, right?
Yeah. That's a key piece of context in the source, yeah. It stresses that uncertainty about what the Fed would actually do remained a key concern.
Even with that lower inflation number.
Right. While that 2.4% figure reportedly suggested, quote, room to cut interest rates to boost growth, the article immediately pivots to the political pressure surrounding the Fed.
Okay, and the source got specific about that pressure, didn't it, on Fed Chair Jerome Powell?
It did, yes. It reports that those lower inflation numbers actually prompted President Trump and the White House to, well, ramp up the pressure on Powell to cut rates.
And it wasn't just the president.
No, the article explicitly mentions Vice President J.D. Vance publicly echoing these demands.
And the language used was pretty strong.
Oh, very strong. According to the report, it quotes Vance calling for a rate cut of at least 1 point.
Wow, 1 full point.
Yeah. And maybe even more pointedly, the source says Vance accused the Fed of, and this is a direct quote from the article's reporting on Vance, monetary malpractice for not cutting rates.
Monetary malpractice. That's quite an accusation, as reported there. What was the administration's reasoning, according to the article, for pushing so hard?
The article frames the administration's view as basically lower rates would likely boost stock prices, maybe spur some economic growth.
Which could potentially help approval ratings.
That's the implication the article conveys, yeah. A mix of reported economic and political motivations.
So how did the article portray the Fed's stance in all this? Were they just ignoring the pressure?
Not ignoring it, but the source indicates the Fed still had its own concerns, primarily about inflation risks.
Even with the 2.4% figure?
Apparently so. And interestingly, the article specifically mentions the Fed being concerned about inflation risks, particularly those tied to Trump's tariffs.
Ah, so linking potential inflation to trade policy itself.
Exactly. It paints this picture of the Fed caught in a balancing act, according to the source. Political demands pushing one way, their own assessment of economic risks, including those tariff-related ones, pushing the other. We're just relaying how the source presented these different viewpoints.
It's understood. It's about mapping out the reported forces at play.
Okay, before we synthesize, you mentioned Tesla earlier. The article gave a specific reason for its stock being up.
It did, briefly. The source attributes Tesla's share rise that day to CEO Elon Musk, reportedly saying he regretted some previous comments about President Trump.
Regretted comments.
Yeah, and the article adds context, noting Musk had previously made a comment suggesting Trump was connected to the Epstein files. The source presents this background neutrally as related to the stock movement.
Okay, interesting detail reported there. So let's pull all these threads together now. Looking at the article's narrative, how did this combination, the cooler inflation, the reported trade news, and this ongoing Fed tension, how did it all come together to shape the market on June 11th? Well, the picture the article paints is one of interacting forces. You had the hope for Fed cuts, right? Initially sparked by the inflation data.
And then maybe amplified by that political pressure.
Kind of turbocharged by it, perhaps, according to the source's narrative. So that's one upward push. But then at the same time, you have this positive signal on the trade front with the rare earth deal reported.
So two different positive drivers hitting at once.
That's how the article presents it. Yeah, like both economic data and geopolitical news were providing sort of tailwinds for the market that day, based on the report.
And stepping back, why does dissecting this one day, based on this one source, matter for you, the listener? What's the takeaway?
I think it's a really clear illustration, right, of how these different levels operate. You see macroeconomic data, the inflation number, you see geopolitics, the U.S.-China deal, and you see domestic politics, the pressure on the Fed.
And how they all reportedly feed directly into market movements.
Precisely. The article shows the market reacting to this specific mix, the inflation news, the trade optimism, and that whole reported drama around the Fed's next move. Understanding these connections, as laid out in the source, it's key to making sense of the headlines you see every day.
It really connects the dots between policy, politics, data, and your portfolio, potentially, based on the source's account anyway.
Yeah, makes it less abstract.
Okay, so let's quickly recap our deep dive into this Crypto.news article about June 11th, 2025. The source points to two main reported reasons for stocks heading higher. One, inflation coming in cooler than expected, which sparked hopes for Fed rate cuts.
And two, positive developments reported in U.S.-China trade talks, especially that deal concerning rare earth minerals.
And all this played out against a backdrop of reported political pressure on the Fed to cut rates versus the Fed's own stated concerns about inflation risks, some potentially linked back to trade policies.
Right. The article suggests the market wasn't just reacting to numbers, but to this whole complex brew of economics, geopolitics, policy expectations, and reported political maneuvering.
So here's a final thought for you to chew on, something that emerges from the material in this source. We saw this reported tension highlighted between the administration wanting lower rates, potentially for growth and political reasons, and the Fed worried about inflation, including risks reportedly tied to trade tariffs. Think about that dynamic. That push and pull between reported political aims and central bank caution. How might that particular balancing act be shaping the wider economy that you navigate every day? Something to consider.